Hey everyone, I am very, very excited about this week's episode because we have a very, very special guest, the man, the myth, the legend, the CPA dude, Mr. Tony Hong. I'm so excited to have you on the podcast, man. Welcome.
Oh, thanks for having me, Carlos. This is gonna be fun, man.
Yeah, no, so Tony, we have a great relationship with Tony and his team, and we've been working with them and with their clients for some time, and I know that you're a busy guy, man, so I appreciate you taking some time and having a chat. We're gonna tackle everything. We're gonna tackle a little bit of everything. I'm gonna throw you some curveballs, and then we're gonna do some talk a little bit about marketing and your strategy and disrupting things out there marketing wise. So it's going to be a very, very fun episode, man. Why don't you just introduce yourself and give the audience a little bit of background about you and your company and what it is that you guys do.
Yeah, for sure. Yeah. So my name's Tony Hong. I'm a certified public accountant, CPA for crazy. It's 10 years now. It's
Ah.
like someone asked me, how long have you been a CPA for? I'm like, at account. I was like, oh my gosh, it's been a decade, which doesn't feel that long, but I guess I'm getting a little bit older now. But yeah,
Yeah.
it's been fun. I started my career at KPMG, worked at a Big Four accounting firm. Then, I was from Minnesota, moved over to the Bay Area now,
Mm.
and then, worked at Uber and DoorDash. If you're in the Bay Area, I work in tech, right?
Yeah.
So yeah, I didn't drive. I was actually a tech.
Right, right.
So people are like,
I
oh, you
was
drove?
CPA doing taxes and driving Uber at the same time.
Yeah, yeah. I was like, man, this dude's struggling. Yeah. Yeah. So yeah, we did that, and then yeah, I formed a company. It was just a side hustle. December of 19 is when I started, and then went full time in April of 2021. So yeah, went from just me being the CPA dude to I got many dudes and dudettes now. We're at a team of 28, and
Love it.
just growing is our big thing. And thankfully we got great partners like you to help us with our growth, and
Love
with
it.
our big sauce and bread and butter has just been tax strategy and planning. So using, a whole bunch of different strategies. We have a big real estate niche, of course, and
Mhm.
just finding ways to save money for people has been
Yeah.
what's really gotten us this far. So we do the strategy filing also. So some people are like, "Do you file taxes?" Oh, yeah, we file taxes too, and we also do the accounting, so all the
Right.
bookkeeping that no one likes to do, but they need to do. So we're full service as much as we can be.
No, I love it, man. And one of the things that I love about you guys, there's a lot of people out there that they're very loyal to their CPAs, right? Because it's because my grandparents used to use that CPA and my parents used to use that CPA and now I use that CPA, even though like it's a it's a dinosaur of a CPA that's not really up to whatever's been going on over the past few years. And one of the things that you guys do is that you guys say, hey, we can strategize. You can keep your CPA, and we can strategize with you. So I think that's one of the really really cool things that you guys offer to clients. Tell us a little bit more about that.
Yeah, for sure. Yeah. So yeah, that spot on is like we're not here to like take over someone's job. Like if you got a bookkeeper, they're great, keep them. If you got
Yeah.
like someone who files your taxes, tax preparer, EA, CPA, that's fine, keep them.
Mhm.
But 9 times out of 10, they've never done tax strategy for you. They've
Right.
just filed the taxes, and proactive tax planning and strategy is really what they're where a lot of the value is. There is value in knowing your books and your financials. There is value in doing your taxes right. I'm not going
Oh
to
yeah,
devalue those services at all, but tax
absolutely.
planning and strategy is really where you can provide a ton of value and get massive ROI on that side. So it's actually an ROI based service where, hey, if you invest, 9 grand, I mean, you could go 50K, right? In just
Yeah,
1 year, but you
exactly.
carry that same thing for the next 20 years. I mean,
Then
50K, 20
it's
years, you're talking about
pretty
a lot of
significant.
money.
Yeah.
Exactly.
Yeah,
Yeah.
exactly. One of the big things that I always say is that there's three key people that you got to have on your corner. A good bookkeeper, you got to have a good CPA, and you got to have a good tax strategist. And one thing that I love about Tony and his team is that they do pretty much all of that, and they're extremely extremely good at what they do. And it's funny because I was having a conversation with a guy from your neck of the woods. He's based out of Palo Alto, and I'm like, hey, who's your CPA? And he's like, oh, Tony. Oh, yes, of course,
Oh,
yes, Tony. And I'm like, hey, how do you meet Tony? And he's like, he actually. well, I don't know if it was you or someone from your team,
Yeah,
but he actually stayed at one of my Airbnbs, and then we just started talking, and now he's a client of you guys, and so I'm like, hey,
oh
that's
yeah,
a
yeah.
cool,
Eldar, yeah, he stays at a lot of Airbnb. Keeps
that's
it.
a cool strategy, man.
Yeah, you just go hand to hand, grassroots, right? Hey, do you got
Right,
kids?
right.
Yeah,
Yeah, hey, thanks, thank you so much. The Airbnb, the amenities were great. Hey, who's your CPA? Love it,
exactly.
man. Yeah,
Yeah.
and so you guys work with a lot of guys that guys and gals that do the short-term rental strategy. Tell us a little bit more about that. Some people, I see this term being thrown around, through social media by the Instagram gurus, like the short-term rental loophole, which I mean, it's part of the tax code, but it's there for us to take advantage of. Tell us a little bit more about how that works and how clients can benefit from that.
Oh, yeah, yeah. So the short-term rental loophole is like amazing it's probably one of the best tax strategies there are. And the reason why is because if you work W-2, you don't have a lot of tax strategies for you. There's a few, don't get me wrong. We found some good ones, but this one is the best in my personal opinion
Mhm.
because you're building wealth, you have appreciation, tax-free income, and you're going to save a ton on your W-2. So number one, it saves you a ton of money. Number two is that short-term rentals are kind of the highest producing cash flow asset in the real
Absolutely.
estate space compared to midterm and long-term, right? Like the
Right.
cash on cash return is so much higher. So
Absolutely.
those are the benefits. And like, what is it? How do you get it? So the short-term rental loophole is made out of the 1986 tax code, actually. So it's been around forever.
Yeah, yeah.
Just no one's like, it just got
Right.
popularized by
Yeah.
it, right?
Just like cost segregation, like people, oh no, we've been doing cost seg for decades. It's just
Yeah.
that now with 100% bonus being front and center, it's becoming popular again, but it's the same thing.
Yeah, it's like it's the hot girl that's always been there. No one just took a look at her, right? It's just like,
Right.
all right, it's that time. So it's been there since 1986, but essentially what it states, and it was made for bed and breakfasts actually.
Mm,
And bed and breakfast, you stay there, then they come in, they cook and they entertain you. So now there's platforms like Airbnb and VRBO that allow you to do this. And that first hoop you have to meet is you have to have an average stay of 7 days or less throughout the whole year. So all that means is take your total days, divide by your total stays, as long as that number is 7.0 or less, you can take that, you meet the first prompt. So you can have like two long stays, say you have like two 30-day stays, and then you
right.
have like 62-day stays, you're well under that, right? Because you'll have 180 divided by 33, right? You're almost at six, a little bit under six. So it
Right.
doesn't always have to be short. You can like game it a little bit. So you do that.
Sure.
Then you just have to do material participation. 7 rules. The 3 easiest ones that our clients meet is 100 hours. No one else works more than you. 500 hours. Anyone else can work more than you. And then the last one's kind of like grace-based one is the substantially performed all services. So you did
Yes.
everything. So
Right.
there's tricks to it. But once you do all this monkey business, then you have to use a cost segregation. Is where like, hey, Carlos, we need a cost seg. We
Yep.
got light this thing on fire. We hop through the first two
Exactly.
hoops. We're ready for you now. Then what happens is that you'll take your cost seg, then you'll separate, why do you need a cost seg even, right? It's
Mhm.
because the tax rules state that only property that has a useful life of 20 years or less will be able to qualify for bonus depreciation, accelerated depreciation. But the IRS is like, if you have an Airbnb that's 39 years, you got a single family home that's 27 and a half years. But
Mhm.
we all know as landlords, floors, doors, cabinets, they don't last 27 and a
It's
half
not
years.
gonna
If
yeah,
it were,
exactly.
man, I would take that tenant. I would thing.
Absolutely. Yeah.
Yeah, but that's not the case. So you hop through it. So you have to get a cost seg. But now the beauty is, Carlos, you go find $200,000. We have $30,000 of startup cost,
Hmm.
$20,000 repairs. You have $250,000 of paper losses, even
Right.
though you only put down a down payment of 100, 150, right? So you magically just found $100,000 out thin air. And now you can offset that against your W-2 income. Effectively, I mean, if you made 250, you take 250 off, paying zero in taxes that year,
Yeah.
fat refund.
Right. No, no, no. And that is key. I hear so many different misconceptions around those conversations, what are like some of the typical ones that you usually run into? Um, specifically when it comes to short-term rentals, the short-term rental loophole. Like, what are some of the misconceptions that you see out there?
Yeah, misconceptions. They don't want one is I don't have enough time. And it's just
Mm,
like, because they're like, they hear 100 hours, 500 hours, and they're like, I can't do that. Well, there's that last prong. One of the prongs that says you substantially performed all services. So you don't have to meet the hours as long as you did everything. You have to do everything
right.
in that case. So that's one where like, I don't got enough time. The next one is they get the short-term rental loophole mixed up with the real estate professional status. Short-term rental loophole, I always called the ugly duckling of real estate professional status. Real
Right.
estate professional status, that's like the unicorn, the pretty one. And then this one's like the ugly duckling.
Yeah.
So they think it's two different things because they'll think 750 hours. They always hear 750 hours. I can't do that. I got to
No.
look
Yeah.
property. You
Right.
probably probably
Exactly.
can, right?
Right.
So
Right.
two different concepts though. Like, yeah, draw that line in the sand, and it's way easier to the short-term rental loophole. That one, the other one is just like, hey, some CPAs, they don't know this. They might report on
Yeah.
Schedule C,
Exactly.
which is wrong. Like 9 times out of 10, it
Right.
should be on an E, Schedule E. It
Right.
can be on a C, don't get me wrong. Every
Mhm.
case is different. But that one, and then they're like, oh, well, let's get me audited. It's like, no, you won't get audited. If so,
Yeah.
Carlos got you covered, right? The reports
Yeah.
are rock solid. They're bulletproof.
Yeah.
So,
Yeah. They're extremely good quality reports. Absolutely.
yeah, and the bang for the buck, it's the best in the market. Like you can't beat it, right? For the
Right.
quality, I'm seeing a lot of these other companies pop up. They're not certified. They're AI generated. They're not even like
Right.
tax people. And I'm like,
Exactly.
dude, I've seen some of our clients buy it, and I'm
Yeah.
like, dude, this thing looks like doo doo. I'm like, it just doesn't have the breakdown. And I'm like,
Exactly.
dude, if this
Yeah.
blows up in an audit, I'm like, I'm sorry, bro, you're losing your money.
I'm washing my hands.
Yeah.
Yeah, that's we one of the things that we're really big about is making sure that our reports are, A plus, USDA, prime, type of reports. So, even on the smaller stuff, on the 1 to 4 unit residential stuff, we still give you the full breakdown, just as if it was a hotel, a senior living facility. And I think that's one of our really big competitive advantages. A lot of the companies that we compete within the same price range, they tackle the sampling method, and the sampling method is like, hey, you've done 100 cost eggs, you've averaged about 22% total accelerated between 5 and 15 year property. Boom, here's your report, and that is right now the IRS is really looking at those. And it makes sense because the IRS is saying, hey, you didn't even check to see if there was carpet or not. You're just assigning a percentage to the report. And a lot of these companies are out there, providing. And that's why there's companies that you can go online and literally get your report within 5 minutes. And you just put like a very brief description, So you have to be extra careful. And I do agree, the bang for the buck that you get, is second to none. It's something that I often tell the owner of a company, hey, we got to raise prices. No, we're not raising prices. And I'm like, all right, because yeah, we're typically our average competitors, they charge about 60% more than 160% more than what we do for the same type of report. So we're very proud of that.
Yeah, yeah, uh-huh. And then you get the human to talk to too. You get Mr. Carlos here, so
Yeah.
it's just nice. It's just confusing, right? Like that's the
Right.
one thing about the tax and industry of where we're at, right? It's like, how do these reports even look? Like, how do they work? It's just a whole different space that no one teaches us stuff in school, right? So you literally can't learn about it. I think there's some decent resources on YouTube these days, but I mean, still, you
Yeah.
got to trust but verify your information.
Right, exactly. And it kind of comes back, and I read somewhere that about 70% of the CPAs out there are baby boomers that are going to retire in the next 10 years or so. And a lot of CPAs that, that we get a call from, or that, hey, I'll get a call from a client, and the client will be like, hey, my CPA is not following. Can you jump in a quick Zoom call? Uh, you know, you'd be surprised, like on a weekly basis, I have at least, 5 to 10 conversations with CPAs that have never seen a 3115, that haven't seen a reclassified depreciation schedule. So they don't know what to do with the accumulated depreciation. And it's very scary. I have a big client here locally, and the guy's worth hundreds of millions of dollars. And it turns out that, I looked at his depreciation schedule. There was, for the same property, there was some stuff that was 39 years, some stuff that was 27 and a half. And it was very funky. And I'm like, hey, let me talk to your CPA. It turns out that, his CPA wasn't even a CPA. It was just his bookkeeper that his mom used to use for one of their businesses, and it's like, man, like you really, like you said earlier, you're going to be saving so much money, go to the pros, go to guys like Tony and his team, go to companies like ours, because you'll definitely get your money's worth. Tony, on the so I think just today I've gotten like 6 phone calls about this, the big beautiful bill.
Yes, yes.
Let's talk about it. So it seems that as of right now, it's waiting for the House to vote on it. But tell us your thoughts about it. Tell us the advantages that you see, the disadvantages that you see. Let's go into that a little bit.
Yeah, yeah. So big beautiful bill. It's the hot story right now, and
Yeah.
yeah, they're trying to get it done before the July 4th weekend here.
Yeah.
And so and actually we should probably stay up tonight. And tonight's probably gonna be released. So yeah, what's essentially happening, and what's really big for a lot of taxpayers is the revival of bonus depreciation. So
Yes.
as of current law today, right on July 3rd here, is that it's at 40%, right? And you get 40% of the benefit the first year. The rest has to be amortized or depreciated over the remaining part of its useful life.
Right.
So if you had a total of 100,000, you only get 40,000 this year, but both drafts are saying 100%. So it should be, you'll get the full $100,000 now instead of $40,000. And it, like the House bill, they wanted bonus depreciation to be here 100%, but phased down. Now the Senate kicked it back. They won 51 to 50 the other day. Now they're saying, hey, bonus depreciation 100% indefinitely. So a permanent part of the tax code. And it's time to go shopping. And once this passes, so now it's back to the House. They're going to vote on their draft from the Senate and see what they're going to kick back and forth. But, the depreciation, at least the Senate didn't change it, which leads me to think that we're gonna have to throw a big party. Now, if
Yeah.
it goes back to 100% bonus depreciation, oh my goodness! Like time to get
Yeah.
shopping for real. Like we still got 6 months left of the year. Start identifying what markets you want to be in. Like it's gonna be big. Where you want to be in, go
Yeah.
get your pre-qual, start doing your underwriting, then you'll be good. But don't worry, the cost seg can always be done the next year, so you don't have to rush to do the
Exactly.
cost seg. But
Right.
you need to buy the property this year and place it in the service.
Exactly. Yeah, exactly. And now, one of the things that I saw, I don't know if it was on the Senate one or the House one, but it was retroactive to January 19. Did you see any change on that? Because I think that's the date. That's the,
Yeah,
I mean,
119. Both sides, I think it is too. So
right.
January 19th moving forward. So if you bought your house January 1 or through 18,
Ah,
that is horrendous.
yeah.
Like that'd be
Yeah.
sad. So it'd be 40%. Like it's
Yeah, I have a client that he bought a big hotel. I think he closed like January 12th. Now the good thing is that he's spending, 3 times the cost of the hotel in renovations,
oh
and
nice.
that's going to be placed in service, probably around December or something like that. So he'll be able to take advantage of, on the bonus depreciation side on the improvements, but on the actual purchase, which was like $5 million hotel, it's still
Yeah.
40% because it was like January 12th or something like that. Yeah, it's funny because so all 6 phone calls that I've gotten today, it's exactly the same question. Hey, I've been waiting to pull the trigger on my cost seg because I'm waiting to see if 100% bonus is coming back. And all of these conversations, these are clients that I've sent proposals out to, since like last year, because their properties were placed in service in 2024, 2023. One of them was 2020, and he was waiting for this thing to pass. And I'm like, man, like this is 2020. Like 2020 was a 100% bonus appreciation year anyway, So just do it because otherwise you're just tipping away from your 5 and 15 year property. So I think there's a big misconception, and it's funny because I have a really really good friend of mine. He's based out of North Carolina, and like the guy, he rocks like the mullet. He's got like a big fat mustache, and he's always wearing like board shorts and t-shirts. And his name is Nick. And one day I get a very formal email from him. It was December 31st, 2024. Dear Mr. Gonzalez, I hereby would like to engage U.S. Tax Advisors Group. And I pick up the phone. I'm like, Nick, what is this? And he's like, oh, it's because I'm trying to do a costing on a property. And I thought that as long as I requested a costing by December 31st, it was applicable for that year. So the only day that matters is the day you place either the property in service or the improvements in service. So I don't know if you're seeing that on your end also, that clients are waiting, like holding off, and it's like, dude, you placed that property in service 2 years ago anyway. So why are you even holding off?
Oh yeah, yeah. No, we always just tell folks, like, when we set up their tax plans, I'm like, all right, what are we working with? What cards we got? And then the cost seg, we kind of give them the time frame. And yeah, the biggest one, we always have the opposite, where they're like, yo, I need to get this in by year end, right? I'm like, well, for the deduction, yeah, or the fee,
Exactly.
right? But like, dude, don't the cost that can be done. I don't know. I tell folks, like, maybe August 18th or 15th, sorry. Like, so maybe start now, actually, to be honest. Now it's
Yeah.
July. Before, you're scrambling, I'm scrambling, is like,
Right.
get your cost seg in. How fast you guys are turning stuff around now these days?
So the official answer for that is 4 weeks or less.
Oh, nice. Oh,
Yeah.
yeah, more than enough time. Yeah. Oh, you can
Yeah,
still
exactly.
procrastinate for, yeah. We're
Yeah.
we're we're just picky. We're just like, hey, can you get this done? Start latest at 8:15. So you get report done 9:15. Oh,
Right.
30 days ahead. But the earlier the better.
Yeah, and that's what I always tell clients. Hey, make sure that you get your report ready for your CPA, for Tony to check it out. Give him at least 30 days, because then that way you can, you're not running through it. You can really look at it and you're like, oh, you know what? No, this was, or hey client, you missed a bunch of the improvements that you told me about. What's up with this? Oh, I forgot to send them over to the cost seg company. Let's make sure that
Yeah.
we tackle the improvements as well. So yeah, we're excited about the big beautiful bill. I mean, there's a lot of controversy around it because there's like some like medical funding, like Medicaid funding is going away, or like what are the most controversial things that you're seeing within the bill besides the 100% bonus?
Oh yeah. So the tax side, so I really paid attention to the tax side. So the salt cap going from 10 to 40,000 is going to be big if you're making
Yes.
$500,000 or less. So that would be huge. That's another benefit. The not so pretty side that I'm not a big fan of is just a lot of the energy incentives
Right.
are going
Yep.
away. And I'm
Yep.
like, so, when Biden came in 22 with his Inflation Reduction Act,
Yeah.
he had a lot of benefits, right, for renewable energies,
Yeah.
and they need to find some money somewhere. So they're slashing those, which is
Right.
kind of backwards given, global warming, the environment,
Yeah, exactly.
wildfires. Like,
Right.
yeah, I'm like, I guess. So I'm not too big of a fan on that. I'm also curious if there were some like Trump slash Elon moves there, kind of like an
Right,
FU.
exactly.
Yeah, I'm always curious if Trump tried to, like, elbow Elon
Yeah.
just to get
Right.
him
Here
over.
you go.
Yeah,
Right.
so there's that. And then the Medicaid, I think they're saying you got to work a minimum 80 hours per month to get it, but it's like, not sure
Yeah.
about that. Then the cut into food stamps. I was
Right.
like, it almost seemed, I can't remember. I had to look up the character actually. So there's Robin Hood, right? You know,
Right.
who we all love. There
Yeah.
is actually the opposite. It was
It
some
was the
other.
complete opposite.
Yeah, it's the opposite where the
Right.
poor get the rich. And, as those items I'm not a big fan of.
Right.
But, I do say, like, hey, don't have a victim mentality. Reach out for help if you
Absolutely.
can.
Yeah.
And that way you can still win the tax game. Personally, I'm just like, hey, the tax laws, they're just written like this. You just have to sit down and figure out how to use it for you.
Yeah.
And so, like, I feel like there's always a way out if you're creative enough to problem solve against it. But those are a couple of things that are like non-tax related, but I was like, oh, does not look too
Yes, yes, it's a very controversial one, and but we'll see how it plays out. But at least on our on our end, on the 100% bonus appreciation side, that's good news for sure. Any changes that you see, because you work with a lot of folks that do the short-term rental, any changes that you foresee? I know there's a big one coming up in September 8th, that has to do with people being able to register without paying or something like that, like reserving a short-term rental without having to pay anything. But and a lot of people are kind of like up in arms about it because they can cancel last minute, and like there's going to be, like, from what I'm seeing, some changes around that. Any specific changes that you're seeing down the line for folks trying to use short-term rentals as a way to build a real estate portfolio?
Yeah, I would say two based off the clients that I've been talking to. So one guy I was just talking to 2 nights ago was catching up. He mentioned to me that Airbnb, similar to what you're saying here, is the chargebacks are going to be
Yeah.
to the operator.
Right.
And I was like, my eyes are just like popping up
Yeah.
to the operator. I'm like, and like Karen culture is bad these days, man. Like
Yes.
everyone just, just wants to complain, get
Right.
something. And it sounds like it's almost an automatic loss.
Right.
And that's really bad because he does short rental arbitrage. So if
Mm-hmm.
he doesn't get that, he can't pay. I'm saying for anyone owns it, either you got to pay the rent through arbitrage or you
Yeah.
got to pay the bank for PITI and your
Right.
mortgage. So that is really sad and bad. Also, with the changes in certain markets, I'm noticing some markets getting saturated, and we're
Mm.
having a little bit less clients from those. I've seen some other areas. So
Yeah, like San Diego, like it's a very saturated place, for
yeah.
Airbnbs. Yeah.
Yeah, yeah. So it's like kind of getting saturated. But the one thing is saturation. And it's just like, oh man, if you can afford it, of course, or get some creative financing with it,
Yeah.
is the luxury area. So like even with
Yeah.
turbulence of, what's been happening the last like 12 months here, the luxury market, I'm not sure if you see it on your side, but like it really hasn't affected our clients that are in those luxury Airbnbs. And I'm
Okay.
just like, huh, interesting. They're a little bit
Mhm.
like recession proof-ish.
Right.
Yeah, they're not struggling versus the folks that are a little bit more in the entry level. They're like, oh, it's been up and down because they have so much more competition.
Yeah,
So
exactly.
yeah, that's
Yeah,
the
I mean, I've been seeing that here in San Diego because up till like a few years ago, a lot of people were buying properties just for Airbnb purposes in like super like suburban areas that are not even close to the local touristy attraction things, right? So and now that it's been significantly restricted to that you have to, like, here locally you have to apply for a license so that you can use
oh
that
yeah.
property as a short-term rental, and there's only so many licenses. I think the folks that bought the $600,000 home, because here, like, the average is, up in your neck of the woods is much higher, but the average home is probably here like around 850, 900,000. So if they buy, if they were buying like these fixer uppers for like 700,000 or 750, and then kind of fixing them up and then turning them into short-term rentals, but they were like in the middle of nowhere. Uh, Now those are the ones that are kind of like, like struggling, as you said, as opposed to the guy that owns the luxury one in La Jolla. He's still killing it.
Yeah.
So it's the same thing over here. Yeah.
Oh, okay, got it, got it. Yeah, those folks that did kind of do those like more fixer upper ones, I've been telling, I've been so a little bit like probably the last couple of years, I've been just doing more leverage. So like my
Hmm.
dad, immigrant from China, and he's
Mm.
just like, you don't buy anything unless you have cash.
Yeah. Same thing with the Mexicans. Yeah.
Right? They're like, I don't believe in credit cards. Like that's taboo, right?
Right. Right.
And like I kind of had that mentality for a while, right? So
Yeah.
you live a very conservative lifestyle. And I met with my wealth advisor, and he sends a whole bunch of clients my way. I send a bunch of clients his way too.
Yeah.
And we started working on my own portfolio, and then we're just talking about lines of credit,
Mm.
leverage, leverage, leverage. I was like, my mind was, that emoji that my head just blows up. I'm like,
Yeah.
how? And a lot of these folks are just, myself included, we're sitting on cash that we
Hmm.
don't even know about, right? So you get that
Right.
rental, you buy a 700, say, ARV is like 850,
Right.
$150,000 equity, get 70% of that out. Now you can, talk about potential down payment somewhere else, right?
Yeah.
So all these homes with that forced depreciation, taking a line of credit to unlock that capital is huge. I'm less like,
Mhm.
man, why I've just been sitting around on the sidelines doing nothing. I'm like, oh man, I was like, man, so I got some line of credits now. I don't use them right now, but
Right, but they're there available for you.
yeah, it just gives you so much more peace of mind. If you got a couple $100,000 sitting around,
Right.
just in case anything were to
Yeah.
happen, why
Yeah,
not? Right.
exactly. Right. No, and then we're in California, so California is very big on ADUs and junior ADUs and all that kind of thing. So you can also use that to put an ADU in your backyard, do a junior ADU, like in the garage or something like that, and get some extra rent, or even you can turn one short-term rental into three.
Yeah.
So
That's huge on that. And then, yeah, and then because those are going to be so profitable because the entry point's so low, right? 250, 300K, or
right,
just
exactly.
a conversion, but 150.
Right.
It would actually be good. So, one thing that, actually going back to that one question you said about what are some misconceptions? People think you only do cost segregation if you have short-term rental, only if you have
Mm-hmm.
reps. It's actually not the case.
Right.
So, like
Yeah,
using
exactly.
this example here, if you have a $300,000 ADU, but you're getting like 4,500 a month, your PITI is barely anything. So you're gonna be
Right. Exactly.
profitable, and paying
Hmm.
taxes on real estate is probably the stupidest thing you can do in the world. So
Yeah.
instead, just go get a cost seg on that property, wipe it away. So if you have positive passive income, that's three. That's like number three of when you do a cost seg. So people get
Hmm.
that really confused. So I just pulled up the
Yeah.
numbers. I'm like, yo, we're positive on this property. You don't have enough losses on this one. They're all long-term
Right.
rentals still.
Right.
Some of them are midterm rentals. And I'm like, we got to juice this one up so you don't have to pay taxes on your
Yeah.
rentals. Yeah.
Right.
So
Yeah.
people
Yeah.
miss
No,
that a
that's
lot.
yeah, that's a big one. And it's funny that you mentioned that because I was having a conversation with a gal the other day, and she's like, "Yeah, I really want to do this, Carlos. Let me send you all the information. Let me send you the settlement statement, appraisal, this, and that." And then I'm like, "Hey, one of the questions that we ask is, are you a passive or non-passive?" And she's like, "Well, I don't know what that means, but I've been taking losses on this property for years. Like I haven't, thankfully, I haven't really had to do anything on that side." And I'm like, "Then why are you even calling me?" Because she had been taking losses for forever. So I'm like, "Hey, her tax bill was like practically nothing." And I'm like, "Hey, you're doing good on your own. Like you don't need me on that side." But so and I think it has a lot to do with what's out there and with bonus depreciation and all that stuff, and people wanting to. It's like the new shiny object, that hot girlfriend that you mentioned. It's like, all right, now I want to take advantage of it. Well, I mean, you don't have to. So it's one of those things that what I tell clients, hey, if you're not paying taxes, you don't need me.
Yeah, exactly. Yeah, there's that. If you're not paying much taxes, it's fine. Oh, the other one, I was actually on a webinar last night. I was talking to some folks,
Yeah.
and we're going over the lazy 1031 exchange.
Mm,
And this is when you sell a property, you
right.
don't do a normal 1031 exchange, and instead it's the lazy version. And what
Okay.
that would be is you sell one, massive cap gains, right?
Right.
Then what you do is you buy another property, then you run bonus depreciation. So you do need a cost seg on it, but
Right.
that new sale, that property, even if it's a long-term rental, will offset those cap gains from the other one.
Yeah.
So
Yeah.
another good time. So like you said, if you are paying taxes because you sold a house, you might want to go consider cost seg and buying another house.
Yeah, exactly. Yeah,
Yeah.
and that's and like for example, in cases, I was just having a conversation with someone, I think it was yesterday or the day before, and he's like, "Hey, man, my situation, what you're offering me is I really can't do. I don't really need it because, I don't need that many losses." But the cool thing is that when you're at a point when you're like, "Hey, I don't need that many losses," you can sort of reverse engineer it, and you can say, "Hey, so I kind of have a little bit of a cushion so that I can create some income events, and then I have these losses that I could use to offset it, kind of like that
Yeah.
lazy 1031." So you can tap into your 401k or stocks or whatever. I mean, that's the way that I think about it. But again, I'm not a CPA, But it's like, hey, you have this cushion of losses that you can potentially take advantage of. Instead of saying, no, I'm just gonna keep straight lining it, just take advantage of it. It's
Yeah.
there.
Yeah, that's the power of the tax code. If you actually know how to use it, is you just rob Peter, pay Paul. It's just a
Yeah.
big game of rob Peter, pay Paul, defer, kick it down the road. And then,
Right.
the sad thing is, we all, the bad joke they always say, nothing's guaranteed but death and taxes.
Yeah, death
And
and
it's like
taxes,
when you
exactly.
do die, if you everything's gonna have a step up basis.
Right.
Wipe away all that capital gain anyway. So it's really where generational wealth is built, right?
Right.
Because the whole new generation is not paying any taxes on that property.
Yeah, yeah, exactly, exactly. No, I love it, man. Before we wrap up, because I want to touch briefly on your branding. I see. So from my perspective, I see. Typically, like if you're a CPA, you want to be like this very formal guy with a tie on your business card and like like a very serious look on the website. And like your logo, the CPA dude is just a guy with sunglasses. Like
Oh yeah, I got
in
them on
my
right here.
opinion,
Yeah.
yeah, there you go. You got the
Uh-huh.
shirt and everything, and it's so disruptive for the industry, in my opinion. I'm not seeing anyone else do this kind of thing. What kind of led you to go that route? Was it a situation where you were like, man, this is like super risky, but fuck it, I'm doing it anyway. Tell me a little bit about how you ended up developing the CPA dude, or were you just like, hey, we'll talk to Tony because he's my CPA dude. How did it develop?
Oh yeah. So this was actually by design from my wife actually. So
Mm.
when we started the company, like my general personality and aura is like very chill. Like I'm not very formal, uptight. Like I used to wear the button-up shirts to press slacks, get to go to work,
Right.
and the formalities, the hello or dear Mr. Gonzalez, right? And
Yeah, yeah,
just
yeah,
like it's just
yeah.
not me. And it's just like,
Right,
dude, tax code's so confusing. Like
right.
section 179, like what section 168J, like bro, like let's be honest, no one gives a fuck about the tax code. They care about saving the money.
Right,
And
exactly.
just translating it in layman's terms of like, hey man, cost seg, all this means is you're getting a lot of write-offs, right? Like,
Yeah, right.
hey, easy, right? It's just how do you translate it so easy? So that's why we wanted to keep the dude brand is just like, hey, we can distill the tax code. Obviously, I know how to
Mhm.
read it, I have my license and everything, right?
Yeah,
Like I've been working it forever. Like, if you want to
right.
get like all technical, yeah, I can, but I don't need to.
I've seen you get technical, so
Yeah.
I can vouch for that.
Yeah, it's just like we don't need to. So it's just like, hey, keep it simple. Like I might tell my team this all the time. Like, hey, I'm like, kiss, keep it simple, stupid. And it's as simple as that. And then that way, like the clients are so lost. Like, hey, let's just make it easier for everyone. So that's where
Right.
the whole CPA Dude brand came from. It's what we embody. Like we don't have any formalities of anything. It's just like, and at the end of the day, it's like, dude, we're just all friends helping each other out. Like,
Yeah.
and like almost like many of my clients just become my friends. And
Right.
like,
No, and because
yeah.
that's the vibe that I see. It's like a very welcoming kind of like, hey, my this is my tribe, hey, I'm part of the CPA dudes, peeps, So I mean that's what I see whenever I talk to your clients. So I'm like, man, I think this is something that people really vibe with, especially because taxes, it's such an intimidating topic, it's such an intimidating conversation. And you have a guy saying, hey, I'm the CPA dude. It's like a chill dude that, hey, let's talk about it and let's find some solutions for you. So, I mean, I am all up for stuff that are gonna, disrupt the markets. And I think that your whole marketing platform, it's awesome that your wife is the one who came up with it. Like I would have thought it was like a big marketing team behind it. But it's so awesome that you guys came up with that because I think it's something that people really connect with in a world where it's so intimidating and formal.
Oh yeah, exactly. Like it doesn't have to be like some people I've talked to other people that come to us and they're like, a CPA yells at me. I'm like, what? I'm like, when do friends yell at friends, right? I'm like, man, it's a whole different industry. It's just like I just don't want to be that or like, you always got like the what is it, like the Anderson Johnson LLP, and I was just
Yeah,
like,
yeah, yeah. The
and
40
we
last
could have.
names.
Yeah,
Right,
yeah, but I'm like, ain't nothing like that. So yeah, our big thing is like my whole vision now. Like I review my goals every day and like
right.
become the Nike of tax firms. So like essentially, if you think tax, I want people to think the CPA dude. And then that's where all our socials and everything are headed towards, like how to build a brand. We're kind of developing the merch side of the business too now. So
I'm
we're gonna have
loving
some
it.
limited drops coming up. So I'm pretty excited. We're actually
Nice,
doing
man. Hey,
collabs
send
with our
something my way. Yeah, send
exactly,
something
yeah.
my way. Yeah.
Oh yeah,
That way
yeah.
I can wear a CPA dude hat,
Oh,
every now and
nice.
then on my episodes. No, love it, man. Yeah, I love the whole vibe. Are you, it looks like you're really heavy on like doing video and social media and that kind of stuff. Is that something that you work on on a daily basis, or do you have like, all right, Mondays I do social media, or how do you typically break down your day on creating content and things like that?
Oh yeah, yeah. So on my stories, I'll do that every day. Just whatever's off the cuff, talk to the clients.
Right.
The reels that we curate, usually I film those on the Sunday, and then we'll
Mm,
we'll batch that for the week. And then from there, I'm always like reading the tax news all the time. If
right.
it's like juicy enough, then I'm like, oh, I gotta get this out.
I
Like
got
the
to do this
all
one.
the stuff that's coming out with Big Beautiful Bill.
Yeah.
I've been doing
Right.
like those raw with some green screen style. So I've
Right.
been just doing that for those. So then I'm trying to work on like tweeting, reading styles.
Yeah.
So it's almost becoming a daily part. It's just name of the game almost, it seems like.
Exactly.
Yeah.
Yeah. Yeah. Exactly. Because it's and we're in a very similar industries where our clients, I'll call a client for 9 months and he won't pick up, and then 30 days before he needs to file, he's calling me 20 times a day, and it's a different game nowadays. People don't like the phone as much as before, and it's like, even, I think you and I, we speak we communicate almost on a weekly basis. And and we communicate via text, email, and it's just so much easier. It's a different world. So that is very cool that you're constantly putting relevant content out there, and good content also. You're curating that stuff. So for you guys that are out there, you got to follow Tony. What's your IG is the CPA dude, or
Yep. The CPA dude underscore. As simple as that. Yep.
yeah. No, I love it. And give us just more information on how people can get a hold of you.
Oh yeah, if you want to get a hold of us, yeah, like Instagram, the CPA Dude, TikTok, the CPA Dude. Our website is the cpadude.com. So that's where if you want to inquire further, but all channels on that side. I think our texting line is 254 CPA Dude. So we have a texting
Nice.
line too. So everything we
Love it.
try to make is CPA Dude for sure.
Right.
Those
Just
are the
consistent on the
best ways.
branding.
Exactly,
Yeah.
exactly.
No, I love it, man. I really do. And then you also, which is something that I've never seen a tax firm do, you also have like the CPA dude community
Yeah.
that you can be part of the community and you jump on like weekly calls and things like that, right?
Oh yeah, yeah. Uh-huh. So it was like actually just brewed out of so I talked to a lot of clients and they weren't ready for like the big investment yet for us, but they still
Okay.
needed help. So we started this so at a scale wise. So it's like I think we only charge like $297 for a full quarter. Because
Okay.
my normal consult rate's like $600 for an hour. So like
Right.
you can get a
Right.
whole quarter's worth. I'm in there every week. And we have another
Okay.
tax strategist in there every week. So you get 2 hours of like tax strategy calls. Whatever you want to ask, just come in. So that's how we're trying to like build up a scale of like trying to serve more people, but at a really affordable rate. Kind of like
Yeah, then they can graduate into the next tier and then start from there.
yeah,
Makes
exactly. It's
sense.
like once they feel so well. I got one guy, he comes in every Tuesday.
Yeah.
His dude, his taxes are just like tied, like all the T's are crossed, I's are dotted. Nothing goes wrong on his account ever because
Yeah.
I see him every week. It's just like
Right.
it's perfect. And he shows up, he puts in the work. So I gotta
Yeah.
get massive kudos for that because people only like, oh man, all right, it's April. Let me go do this now. But
Yeah, exactly. It's April 14th, let me take a look at my receipts, you know.
yeah, exactly.
Right. No, I love it, man, because it's such a cool way to staying in touch with clients, with people, potential clients also. Uh I mean, you'd be surprised. I mean, probably, well, you probably wouldn't be surprised, but I mean, the times that I hear, hey, you know what? It's because my CPA, he's so difficult to get a hold of. Hey, I emailed my CPA, I've already emailed him or her 3, 4 times. No, it's because the lady that does my taxes hasn't gotten back to me. And then they're asking all those questions to me. And then I'm like, sorry, but you got to go to your CPA about it. And some of these are like very basic questions that they just can't get answers to just because the threshold for communication is, it's abysmal sometimes, like, and I get it, everyone's busy, but that is such an awesome way for people to stay in, in touch with you, if they're at that point where they're like, all right, I'm not ready for this, but at least this is a good way that I can, get some education on my situation. So I
Yep.
love it, man. I haven't seen anyone else do that kind of thing. So I think that's really, really cool, man.
Thank you.
Tony, thank you so much, man. I know that you're a busy guy, and thank you for jumping on the podcast with me. We're gonna after the big beautiful bill passes, we're gonna have to do another one in a few months just to see how things are happening on
Oh,
our
sure.
side of things.
Oh,
But very thankful for you jumping on the call, man. I appreciate it.
oh yeah. Thanks for having us. Yeah, super excited for part two on this. We'll see what flushes out. It's gonna be buying season, I feel like.
Yeah, yeah, absolutely, absolutely, man. Well, thank you so much, Tony, and you guys make sure that you follow Tony.
Thank you.
Hey, thanks, man.